Good evening, everybody, and it's nice to be back live on your screens. And pre-Christmas, hopefully I can get in a nice little session here. I'm going to focus on evaluating your trading, a very, very important part of what we do. And hopefully I can give you some insight into what should be a fairly short process, but nonetheless a very important one. Now, you will have seen over the months, we at Corellian firmly believe in having a process that sits behind whatever we do, and that's a process that's very iterative. We should be challenging what we actually do on a regular basis to make sure we build a winning formula. You often hear about elite athletes always falling back on their process because that's their happy place where they know things work. They've worked hard on that on the training ground. And we should be doing exactly the same with this process, Will. So we should be evaluating that on a regular basis. And, what I'm going to do tonight is look at the evaluation side that we see on that wheel. And it can take many, many forms. Now, obviously, whilst we're in a trade, we need to be evaluating price action. We need to be evaluating markets. And, maybe we're jiggling around with our order management in order to effect the best that we can out of the market with the trade that we have on. But I'm going to be looking at kind of post-trade evaluation. We've got a couple of things here, the trading process itself. What are we actually doing? What are we doing that works, and what are we doing that not working? And how can we eradicate some of those human errors that are coming into our process? We can also dig a bit deeper for those of you that maybe a bit more statistical or analytical in what they do, because we can get a batch of trades and we can maybe start looking at in-depth statistical analysis of our trading. Maybe looking at the duration of our trades or the average number of pips that we tend to take profit on versus taking a loss on, and going a bit deeper. We've also got another area of evaluation, and that would be evaluating our trading goals. And very, very briefly on this one, that's something I think is very important. We should not be just trading willy-nilly in the market and not actually having any idea of what we're actually trying to get out of that market. So let's look at setting some goals, and then we can start evaluating, whether they're financial goals, the number of products we want to trade in a year, or an aspiration towards increasing those products, or even the size of our positions. So, that's something else that we can be evaluating on an ongoing basis. And then if we really go 30,000 feet, the real big picture, where does our trading sit within, our work-life balance, our hobbies versus our work versus, family, friends, the time that we offer up to all of these areas of our life. So that's a big picture thing that I would also like people to do at times. But, we can park that one for another webinar. So tonight I'm actually going to focus on the trading process. I'm just going to run through, how we should go about it. Very, very key that we don't make it an elongated process. It simply should be an honest assessment of an individual trade or a batch of trades, or done at the end of a week, or any time period where we can actually look into what we're actually doing, and where does that sit within the framework of what we're trying to achieve in terms of building an idea in the market, going around that process where we're making sure we're being honest with ourselves. This isn't a post-mortem. This should be a quick conversation with yourself. That's how I like to view it. That quick look in the mirror, that quick conversation with yourself. Write a couple of notes down. Don't make it too time consuming or laborious, because then we'll get fed up with it and then we won't do it. And that's not where we want to be. We should be looking at it on a regular basis and finding out what we're doing right, repeat those, and what we're doing wrong, and try and eradicate them. So let's take a quick look at the gold chart. Gold being very, very busy of late. And I'm not looking at this from a perspective of whether I believe it's going up or down, I'm long or short. I'm looking at it purely from a perspective of once I've made my trade, I've crystallized my profit or my loss maybe, and I've decided I want to do a quick analysis, an evaluation of that trade. What are the questions I want to be asking myself? What am I looking at? Well, the first one really should be all about our idea generation. Do we understand the markets that we're in? Am I in sync with the market drivers? Whether it be the data that's coming through that we think is driving the market, or results as we see from the Fed tonight, could be very, very influential, on this type of market. But if we're looking at the wrong driver, then maybe we're going to be out of sync with the market. And that's very, very important for us to realize quickly, or certainly if we've closed out a trade and we may be a bit disappointed with it, or we couldn't understand why maybe we lost money when we thought we had the right idea, we can do a simple analysis to get ourselves back into the market, maybe in better sync with the market drivers. The other really key thing we should always look at are our risk levels. There may be times where we can look back at the trade and we realize that actually we had too much risk in the market versus the levels of conviction when we had the conversation and we generated that idea. Maybe we weren't 100% sure. Maybe it was a bit of a whim, and maybe we went in there with too much risk. What happens when you have too much risk is you start making some stranger, maybe less logical decisions, because the size of the risk and potentially the size of the losses sometimes makes you trade differently. So that could possibly be a reason. Or similarly, you could get to the end of your trade and be disappointed with the level of profit that you've actually made on a winning idea. And again, that could be because you were under leveraged. Maybe you were a bit nervous when you went in and you weren't associating your risk levels with the levels of conviction of your trade. So things like that are the questions we should be asking ourselves to help us when we start putting on the next trade. Now, another element, again, and this is actually more kind of about us and our human psyche, is our timing. Did we jump on the bandwagon too quickly? We don't always have to put a trade on as soon as we've thought that trade up. What we should be doing is taking a little bit more time to analyze the charts to find out whether there's an opportunity for us to wait for the market to come to us before we enter, and then hopefully get in at better levels. But sometimes our eagerness gets us to jump in, and we don't actually have the ability to analyze that until we're out of that trade. And so sometimes we get into the trade at the wrong level. And again, if your starting point isn't quite right, it starts putting you under different pressures. So again, that timing, we could also be in a situation where you lose half the move because you're actually too passive and you're always waiting for a better opportunity. And those better opportunities, certainly in trending markets, don't often come to you. So, it works both sides of the coin, but we should be honest in assessing whether we were correct in our timing, too patient, too impatient, those kind of things. They're the questions we should be asking ourselves. One of the biggest ones, and again, you have to wait until you've closed out these trades, is to work out whether our disciplines have been correct. So many traders lose money because they lack discipline. And sometimes they lack discipline because they give the trade away too quickly. We always talk about planning our trade and then trade the plan. And once we're trading a plan, we're trading something that we've actually visualized ourselves. We've looked at the charts. We've got the entry and exit levels. We've got any potential trigger levels if we want to see a move start accelerating through certain levels on a break. And all that should be part of our planning. And once we go to market, we should start trading that plan. Now, if at the end of the trade, we've actually not made as much as we thought, or we've cut ourselves out too cheaply because we weren't patient enough, that tends to be a lack of discipline. And it's very, very important that we carry out those plans, because the worst thing we can do is throw away our best trades because we either got a bit nervous and took profit way too quickly. We weren't taking on board all of the price action and the information that we had before we started that trade. And therefore, we've lacked discipline. We haven't seen the job through right to the end. So that's, again, something that is all about honesty there. We have to make sure we're honest with ourselves that we were disciplined in what we did. And then the final thing, clearly, is can we make progress from what we're doing? What we're actually doing here, if you look, idea generation, risk levels, these are boxes on that trading process. We're actually, by doing this, evaluating that trading process to help sharpen up our trading techniques. And by asking ourselves these honest questions, we should be at a point afterwards where we can say, I did this right, I did this wrong, I want to keep what I did right, and maybe leverage on that because I think I'm good at that side of things. But for me to get better as a trader, I need to tighten up on these two areas because I feel I'm a bit lacking in discipline, or maybe I get a bit too eager with my trading. Maybe I need to be a bit more patient before I get in. Once we start asking those questions with ourselves, we should be giving ourselves those answers, and that in an iterative way should help us improve our trading process. Great thing about improving your trading process, it becomes something you really do rely on, you have confidence in, and what that by nature will do is control your emotions a lot more. So by doing this on a regular basis, you are putting yourself in a much, much better place and a much, much stronger position to be able to trade successfully in the future. I hope that's helped us this evening. I do wish you all a great Christmas, and I'm certainly looking forward to seeing you all in 2024. Thanks very much.